Home prices fall in 20 out of the 50 major metro areas in the United States, according to this new Redfin report. We're gonna cover that and more in this weekly housing market update. Let's get right to it. All right, so this Redfin article was published on January 13th, 2023, so it is fresh data. It is titled Housing Market Update. Sales are slow to kick off the new year, but more buyers start searching. Home sales are at their slowest pace since the housing market nearly ground to a halt at the beginning of the pandemic, with homes taking nearly 44 days to sell on average. Pending home sales dropped 32% year on year, and this is their lowest level on record, along with mortgage purchase applications dropping to their lowest level since 2014. High mortgage rates and extreme winter weather at the start of the year deterred would-be homebuyers, which exacerbated the typical holiday slowdown. But the article goes on to say that there are signs that early homebuyer demand is actually rising. The Homebuyers Demand Index posted a 6% increase over last month, along with Google searches for homes for sale are actually on the rise. Some buyers are likely coming in from the sidelines because mortgage rates have now dropped to 6.33% from their November peak of over 7%, which saves the typical homebuyer about $250 a month. Now, even though mortgage rates have moderated, 6.33% is still dramatically higher than where we were a year ago, and people are still feeling the pinch of affordability, and that's probably why we're starting to see home prices actually fall in some of these areas that we're going to talk about here in just a second. Now, based on mortgage rates moderating, the Redfin Deputy Chief Economist Taylor Marr says that we're entering 2023 with positive economic news. The latest Consumer Price Index report confirms that the worst of inflation is behind us. That means the Fed is likely to continue easing its interest rate increases, which should cause mortgage rates to continue gradually declining. This could bring back some home buyers here in the coming months. And then he goes on to say, we've already seen an uptick in people initiating home searches. Although those house hunters haven't yet turned into buyers, they may soon, given that the monthly mortgage payments are notably down from their peak and the latest inflation and employment data lower the chances of a recession. We have probably seen the worst with inflation, but it's certainly not going down dramatically. We're in a period right now of what we would probably refer to as disinflation. So we're still seeing inflation, it's just a lower amount than it was previously. In other words, if the CPI was somewhere around 9% and it falls to 7%, 7% is still high inflation, but it's lower than it was at that peak of 9%. So that disinflation, in my view, is still a major concern at this point. And I personally think that it'll continue to put pressure on would-be homebuyers moving into 2023. All right, so now on to the 20 major metro areas where home prices are actually falling. So to put things into context, the typical US home sold for just over $351,000 as of January 8th. Now that is actually up 0.8% from a year earlier, but it is down about 10% from the June peak. With that said, prices fell 10.6% year over year in San Francisco, 5% in Seattle, 4.9% in San Jose, 4% in Austin, 3.8% in Detroit, 3.7% in Phoenix, 3.4% in Oakland, 3% in Boston, 3% in Los Angeles, 3% in Sacramento, my market, 2.6% in San Diego, 2.5% in Chicago, and then home prices fell less than 2% in Portland, Oregon, Riverside, California, Newark, New York, Pittsburgh, Las Vegas, and Washington, D.C. So according to this data from Redfin, it looks like California is seeing the bulk of price reductions at this point. And then to wrap things up, let's look at the key housing market takeaways for 400 plus US metros. So this is across the entire United States. This would be more like national data, and we'll just run through this very quickly. The median home price is just over $351,000. That is up 0.8% year on year. The median asking price, so the amount the home is actually listed for, is up 3.9% year on year, being listed at $352,000. Now, the average monthly mortgage payment for the median asking price is sitting at $2,263 per month. That's with a 30-year fixed mortgage at 6.33%. Now, that monthly mortgage payment is actually up about 33% from just a year ago. So on the scale of affordability, even though rates have moderated a hair, homes are still much less affordable than they were just 12 months ago. Pending home sales are actually down about 32% year on year. That is the lowest level on record. Now, out of the 50 major metro US areas, pending home sales actually fell the most in Las Vegas, coming in at 62% year on year, Jacksonville, Florida at 57% year on year, Phoenix, Arizona at 57%, Austin, Texas at 55%, and Nashville coming in at 50%. Now, one thing that's really interesting about these particular areas, these are areas where a ton of iBuyers came into the market and or investors. So it is very likely that investors exited the market because they can no longer get yield, and iBuyers are no longer able to flip that property very quickly for a profit. In addition to that, new listings of homes for sale fell about 22% year on year. So we're not seeing a ton of new inventory hit the market at this time. Active listings were up about 21% from a year earlier. That's the biggest annual increase since at least 2015. And then months worth of supply is up to 3.8 months, which is up from 1.9 months just a year earlier. 27% of homes that went under contract had an accepted offer within the first 2 weeks being on the market. That's actually down 34% from a year earlier. But if you think about that, it means that less than 1/3 of homes are selling within a 2-week period. So you have properties that are coming on the market and sitting much, much longer than they were just a year ago. Median days on market is 44 days, so it's taking approximately 6 weeks to sell a property. That's actually the longest period since April of 2020, just after the pandemic. And only 22% of homes sold above their final list price, which is down 40% from a year earlier, and it's the lowest level since March of 2020. And then the final key takeaway is that homes on average are selling for about 98% of their original list price, whereas just a year earlier they were selling on average for what those homes were listed for. What this means for home buyers is they have the ability to negotiate a little bit harder with the sellers. They're generally getting better deals, and the sellers are having to be more willing to work with those potential buyers. All right, so that is going to wrap it up for today's weekly housing market update with all of the new Redfin data. If you like this information, you'd like to look at the article, there's some really cool additional charts that are available. I'll go ahead and link to this article here in the show notes below. With that, I hope you all are having a wonderful day. I really appreciate you taking the time to watch this video. If you haven't done so already, please consider hitting that like button, subscribing if you like weekly housing market updates and helpful home buyer tips. We'll see you on the next video. Take care.